This is Daniela Cambone and you are watching Kitco News. My guest today is Vince Lanci. He's a managing partner over at FMX Connect. Vince, thank you for joining us today. Vince, would like to talk to you today about the big news out there. CME Group raising margin requirements by 22.2% for trading gold futures on the COMEX division of the New York Mercantile Exchange. Tell us a little bit about the impact we're seeing on the markets.
Well, the rate hikes came last night with the market trading about 18.16. So the timing of the rate hikes was perfect if you're a bear. The practical reason for the rate hikes is to curb speculation, and the consensus is at the higher levels that speculation was getting a little bit, the market was getting a little bit overbought, and as a result, you want to curb some speculation. There are people who have more conspiratorial views, but the bottom line is they're just trying to reduce volatility in the market, and the net result will almost always be a sell-off in the market. Historically, most recently, it happened in silver. The silver market, however, was resistant to the rate hikes, and there were about 3 or 4 before silver finally capitulated. I think these rate hikes won't have to happen 4 times because the market's getting the message right away.
All right, Vince, so what's next for gold?
Depends on your time frame, but our technical analyst, Greg Saponis, believes that the 1685 to 1700 levels are incredibly important support levels. Below that, I think we have some serious problems. If it goes 1685, 1700 and holds that area with minor support at 1720, then you could have another leg higher to the 2000 area. Now, 2000 seems like a random number just because it ends in zeros, but there's some significant reasons for it, which we can get into if you like.
Yes, let's get into it. What are some of the factors we should be paying attention to that could push it to 2000?
Right, it ties into the factors. That's actually a good question. On the bull side, the factors you should be looking for are the obvious ones that have been in the news constantly. And that would be the crisis in Europe, which is basically a deflationary sovereign risk crisis, which has caused Europeans to look to safety. And that causes gold to rally along with the dollar as a safe haven, contrary to what gold usually does, which is move inversely to the dollar. So how Europe handles its crisis will affect the price of gold. The irony of that is Europe will probably handle its crisis by printing more money to avoid default. And printing more money is inflationary, which creates another issue because the U.S., we believe, does not want a strong dollar. Western capitalist countries are trying to race their currencies to the bottom, we believe, and in doing so, debase their currency and devalue their debt. The result is gold goes higher. So there's your bull cases. On the FX side, everyone wants to get their currency to zero, but in Europe, there's sovereign risk. That's bullish for gold. Tactically, or more mechanically, the reason I picked 2000 as a factor on the upside is because there are over 20,000 options, and FMX Connect is primarily an options analytics firm. There are over 20,000 options in the 2000 strike in December. And historically, that sort of open interest acts like a magnet, for good or bad. So we think a healthy pullback would be in order before going higher. We are agnostic, but we do these things for clients.
All right, so that's on the bullish side of things. What factors would support the bear?
Well, further margin hikes would be bearish for the market. A good result in Europe, I don't know what the good result will be, but some sort of good result would be bearish for gold. But, more intimate with the market, you have to start looking at hedge funds. In particular, as an example, John Paulson's fund is down about 31%. He is very long gold. If a fund like Paulson's puts the gates up and prevents redemptions, then you have to be very concerned about him being forced to liquidate gold. I don't see that happening. In fact, frankly, we believe he's selling into strength right here. But you have to be careful that margin calls in markets that are going against hedge funds will cause them to liquidate products that are making them money. So to speak, an ebbing tide sinks all boats.
All right. Thank you so much, Vince.
Thank you.
And thank you for watching. You can email me your comments and questions at newsfeedback@kitco.com.